Bitcoin dropped to $49,000 to the penny. Today, I'm going to be going through the technical analysis of Bitcoin, sharing my thoughts and opinions as to where I think the price action is heading next. As I get into today's video, guys, do go ahead and smash that like button. I really do appreciate that. If you happen to be new to the channel, subscribe and stay up to date with all the videos that we do here at GQ Crypto. Let's jump right down into today's analysis. So here we have Bitcoin paired up with USDT. We're on the one-day Binance chart. And well, we can see here that we have had a very significant slip to the downside. We lost the $53,485 that was the previous swing low on the 5th of July. Now, this move within here is a B wave high. So that is a running flat correction. That's the one that we were talking about in previous videos and what was confirmed yesterday with this most recent break to the downside. Okay, that there makes our swing high on the 29th of July our B wave high. That high being $70,079. Okay, so that with our B wave being up here, how low can we possibly go? Okay, so I want to reflect on a couple of interesting things. One, we had this range between $48,969 and $50,744. This was a previous area of resistance that was on the 11th of January that was turned into support over here on the 23rd of February. Actually, we tested it on multiple occasions: 17th of February, 20th of February, 21st of February, 23rd, and of course the 24th of February, with a slight retest on the 26th of February. Okay, this was a previous resistance turning to support, and this is where we went down to and found support. Okay, so this is still a key range for Bitcoin, a key support level. However, it's important to note that we haven't necessarily finished our correction here within this final C wave leg to the downside. This is going to be quite a deep potential retracement. That's not to say that it happens to happen straight away and that we just move straight down, because I do expect relief rallies from time to time. Okay, so taking a look at this, where do we think things could potentially be going? Well, taking a look at how bad this has gotten so far, we are not expecting this to be a simple correction. Instead, I'm looking for this to basically come down into what would be a bit of a, how do I articulate it? Just a bit further of a correction. I'm not looking for $42,000. I know a lot of people are calling for 42K. I'm not one of those. To me, our current lows of $49,000 could potentially hold as the swing low for quite some time. I'm going to go ahead and repurpose this line and put it down here at $49,000. Okay, and the reason for that is the next move to the downside, which would, in my opinion, be a final leg down, doesn't have to come down deeper than this. Last time I checked this, I'm going to check this again anyway, just to make sure that I am 100% confident on what I am saying here. So taking a look at this, we can see here that we had a bit of a move to the downside here, hitting a deeper than 1.618 on this daily time frame. And for this to be clearer, I'm going to have to take this down to a 4-hour time frame and just review what's gone on here. So here we have a 3-wave correction, and then this is the 5-wave correction. Okay, so this is quite deep, and it is irregular in the way that it's kind of moved, because you can see that we came down deeper than the 1.618 just here. Okay, but we don't have the internal structures that really allow for it. If you wanted to, we could argue that maybe this is a 5th extension. In order to do that, we come down to the 1-hour time frame, and we just want to confirm that that is exactly what's going on, which to me still doesn't really fit very well. You can kind of see these little legs to the downside here. They are more corrective than impulsive. We do end up with the impulsions all coming down here and nesting in nicely, and you know, it is an area of concern, but I'm not looking at it through that lens that we are in an impulsive break to the downside. Okay, so if I come back to our daily time frame, knowing that this doesn't have the internal workings that would be required for us to see a significant push to the downside where we guarantee that the minimum expectation would be 49K or lower, my expectations would actually be more that we are to retest this range around $49,000 to $50,000 and potentially hold hold it. If we don't and we do lose this area, then I think we are going to be having to review those structures with a slightly different perspective, and that perspective being that we have nested structures that are all basically building up into one big, huge finite 5-wave impulsive breakdown. But I think it's a little too soon to really be calling that. So knowing that we are, of course, in a pretty bearish place here for Bitcoin, it's important that we know that Elliott wave theory has potentially said to us that we've bottomed out. But I also want to kind of stress that Elliott wave theory is very subjective to the analyst that is drawing the chart patterns. Personally, for me right now, I want more data to be more concrete about where Elliott wave theory is heading when it comes to BTC. So instead of using Elliott wave theory as my kind of go-to for this one, I'm going to rely on other tools as well to help shape the probability of Bitcoin going down deeper or holding at the current 49K level. We have our EMAs. These are all in bearish territory at the moment, okay? So what I mean by that is the white line is the 200-day EMA. This 200-day EMA is above the price action. Now, when the price is lower than the 200 EMA, that is considered a bearish trend, okay? So when you're lower than 200 EMA on a daily time frame, you should be bearish. That's your bearish default position, okay? Now, obviously, that doesn't always work because at some point you have to reverse. You can't always be below it. If you're always below it, you're always bearish, and you'll never be, in a bullish state of play ever, right? But the other thing that's also worth noting here is that the 50 SMA, the yellow line that's coming through the chart, this is your simple moving average over 50 candles. And when the 50 SMA crosses lower than the 200 EMA, they call that a death cross. Now, obviously, EMAs are just glorified moving averages, meaning they only show you what's already happened. And so when we see the 50 SMA cross down lower than the 200 EMA, that death cross is only showing you what's already happened in terms of price action. But people will react to it, and they will react negatively because it's got a big scary name called death cross. Now, what it means is that the short-term price action of the 50 candles is now lower than the 200 candles of the EMA. Okay, so that is a bearish thing to also bear in mind, that the market will probably react negatively to a death cross forming here. I would say that we're probably about 1 to probably 2 weeks out of that death cross, okay? So just bear in mind that the formation of everything that's going on here is leading into that. If we bring on smart money concepts, we can also see that our bearish structures are confirmed still, okay? We never got a breakout, we never got a change of our characterization out of that bearish structure, okay? So we were hoping that we were going to hold this area and that we were going to rally, and instead we got this breakdown. We lost all these key areas: equilibrium, 200 EMA, 50 EMA, 50 SMA. Obviously hitting the higher ranges up here as well, these being your premium pricing areas, hitting that 70K range, and basically coming down into weak lows and discounted pricing. So smart money concepts remains bearish, and it hasn't changed. It got this bearish status on the 7th of July. Even though we saw this rally to the upside, we hit that area with a new daily lower high. We've obviously come down into lower lows, and for the most part, we're in bearish territory. Now, with all that being said, I want to kind of speculate a little bit here to tell you about my thoughts and opinions on what this price action tells me. Okay, so Elliott wave theory tells us one thing. Smart money concept tells us the opposite to a degree. And we need to kind of be also aware that the nature of the candlesticks or the price action in itself actually isn't bad. Okay, and this stems from a couple of reasons. One, obviously we have these lower lows and these lower highs, right, on price action. This is known as bearish, right, because basically your price action is going down into lower lows and you can't rally up higher than the previous swing highs. A lot of people believe that to be bearish, but there is a bullish take here. And that bullish take is that you have an overlapping candlestick nature. Okay, so we come down and we have all of this overlapping price action here. And with the most recent ones, not so much of an overlap, right? But you can see here that all of this overlap actually helps us understand that this is a short-term correction. Yes, it's taken a very long time to play out. When I say short-term, I'm not talking about time itself. I'm talking about the actual structures of the price action. These are short-term corrections, okay, because they have an overlapping nature to candlesticks. Now, what does that mean? Well, that means that you're not in a trend, okay? This is the key takeaway. This particular type of structure is not a trend. Now, this kind of structure, where we have almost a straight drop to the downside, that is usually considered a trend, but the internal workings, to me, I think don't really fit it very well. But it's one of those that we have to kind of consider, and why I want more data to be able to analyze whether or not we are turning all of this finally into a trend. But as it stands at the moment, I don't think this is a trend. And you can also note as well, with this most recent wick down here, okay, that this is now overlapping this, okay, and that doesn't help with trends. Trends don't do things like that, not typically. Okay, so looking at this and knowing how long this has lasted, although potentially, you know, we might have to come down a little bit deeper than 49, it's not a guarantee, but it's possible, right? That this correction is potentially nearing its end, and we could potentially start seeing that next big run to the upside. I've went through this yesterday in terms of why I believe that this is a short-term correction. It is not a major long-term correction. And this is driven mainly because every year we have a Bitcoin halving event. That Bitcoin halving event happens to coincide with a US election year. And the US election year obviously has an impact as well on terms of, you know, let's just say different politicians, different chairs of different organizations in the government. And of course, we have to consider the Fed and their involvement in things. Now, typically 1 year after the US election, and I say typically, it's actually a guarantee on Bitcoin's price action. Every single year after every single year after the US election, Bitcoin has had a bull market peak. That has happened every single time. Is this going to be the exception? Is this where Bitcoin doesn't do that? Or is this where actually history does repeat itself, as they say, and we do actually have a bull market peak in 2025? I went through that yesterday. If you haven't checked that video out, you guys should probably do so, because I think it's really enlightening. I'll link that up here somewhere for you guys to check it out. Now, if you found today's video useful and informative, smash that like button. If you're new to the channel, subscribe. And if you haven't done so already, join us in our free Discord server linked in the description down below, where there's a like-minded individuals who talk crypto 24/7. Guys, you won't regret it. Go ahead and join our free Discord linked below.